Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 18th of October 2023 and here are the questions we will be answering today. Is hosting the Olympics a good bet for India? How to decode the IT results? How do analysts interpret HDFC Bank's Q2 show? And what is the model code of conduct? Is it time for the Olympics torch to be relayed to India? Prime Minister Narendra Modi believes so. He has confirmed that India will bid to host the 2036 Olympics. But is it feasible to host the mega sporting event in India given the economic pressures the host nations have historically faced? Abhijit Kumar finds out in this report.
The stage is set. India is now the fifth largest economy, and in about next 5 years, it is poised to take over both Japan and Germany to reach the third spot. So now, after hosting a successful G20 event, Prime Minister Narendra Modi is eyeing another milestone.
साल 2036 में भारत में ओलंपिक्स का सफल आयोजन हो, इसके लिए भारत अपने प्रयासों में कोई कमी नहीं रखेगा.
PM Modi made this announcement during the inauguration of the 141st International Olympic Committee session at the Geo World Centre in Mumbai. Hosting the Olympics is a huge task. It boosts the host nation's global image and transforms its infrastructure. But while hosting the Olympics brings prestige and global attention, it is no secret that it often comes with a hefty price tag. Numerous cities worldwide have struggled to recoup their investments. In some cases, the economic benefits have fallen far short of expectations. A 2020 study by researchers at the Oxford University claimed that starting 1960, every Olympics has overshot the budget at an average of 172% in inflation-adjusted terms. Like Japan ended up spending around $28 billion. In the beginning, it had planned to spend $7.3 billion. For the 2016 Olympics, host Rio de Janeiro had budgeted $14 billion but ended up spending around $20 billion. From the construction of the Olympic Village, the Media Village, and the travel and accommodation costs of the athletes to the security budget, all of it puts a heavy dent in the economy of the host country. The average GDP growth of host nations before and after the Olympic Games since 1960 saw a clear dip. So, is it a good idea to host the Olympics? American professor Andrew Zimbalist, who has looked closely at the economic impact of hosting the Games and has also written 3 books on it, believes it is not a good idea.
No, generally it's a very bad bet. It makes no sense to rebuild the Olympic Shangri-La every 4 years in a new city around the world. It's a tremendous waste of resources. You end up building facilities and infrastructure that you don't need. Most countries, most cities who have hosted either the Winter or Summer Olympics have not found that there's any positive economic effect. And indeed, much more often, there's a very substantial financial deficit between the revenues that you generate and the costs.
So why do countries still bid for the Olympics?
There's a political statement from these leaders. They want to be reelected, and they know that in a typical urban political economy, that the construction industry employs more people than anybody else. It's the largest industry. Well, because construction companies are going to get billions and billions dollars worth of business.
And what about the social cost?
You need a lot of land to host the Olympic Games. Each of the venues might be taking up 10, 15, 20, 30, 40 acres. There's not a lot of empty or free or available urban land. Urban real estate is growing increasingly scarce. In order to find that land, what you have to do is basically tell people who are on the land, and it's almost always poor people, that they have to get off. You have to evict them.
India has had its share of hosting both. Since independence, the country has hosted 3 major sporting events: Asian Games in 1951 and 1982, and the 2010 Commonwealth Games in Delhi. The Commonwealth Games faced budget overruns, allegations of corruption, and infrastructure issues. The event left a mixed legacy, with many facilities underutilized and deteriorating. So, what is the way out?
The obvious solution is to have one permanent host, or maybe 2 or 3 rotating, but I think even better is one permanent host. You don't have to rebuild everything. You just use the facilities that are there. And in between the 4-year cycle, you have other kinds of smaller competitions there, and you have the facilities for practice for the world's best athletes.
But not all agree that hosting the Olympics is a bad idea. They believe that the mega event leaves a huge positive impact on the hosting country. It creates a sporting atmosphere and encourages an entire generation. And India definitely needs it at this juncture, when its athletes have started shining at the international stage.
I think definitely it's a very good idea to host Olympics because it's not about just the cost, which goes in terms of infrastructure and maintenance. There is one thing to it that, it takes India global, on a platform, because Olympics is a very large global event. It will also lead to a good domestic consumption and drive a lot of people into the country. And I think after the Olympics is done, the infrastructure can be used very efficiently for promoting these other sports.
While past experiences and financial concerns are valid, hosting the Olympics is also an opportunity to showcase India's capabilities and cement its place in the global arena. The key lies in thorough planning, transparency, and prudent management. So the decision to bid for the 2036 Olympics carries both risks and rewards.
Bidding for Olympics is yet another sign that India is positioning itself for a greater role. Moving on, the IT industry, which is one of the key drivers of its growth and rising aspirations, is declaring Q2 results. Most major companies have come out with their earnings, while the rest will be announced by the end of October. In today's segment, Tariq Ahmed will decode the second quarter results of the major Indian IT companies.
The Q2 FY24 earnings of major IT companies in India are out, and they are positive on margins and deal wins. This is on the backdrop of reduced revenue guidance for this year by the IT majors due to the global economic slowdown and a decline in discretionary spending by clients. India's biggest IT company, Tata Consultancy Service, indicated a moderate growth outlook for FY24. It saw a notable 8.7% rise of profit after tax at Rs 11,342 crore in the September quarter compared to Rs 10,431 crore in the same period last year. Total revenue of TCS increased by 7.9% year-on-year, reaching Rs 59,692 crores in the September quarter. However, the sequential revenue growth was marginal, with only 0.5% increase in the second quarter of FY24. India's second largest software exporter by revenue, Infosys profit after tax increased by 3.2% year-on-year and stood at Rs 6,212 crores in Q2. The company marked a year-on-year revenue growth of 6.7% at Rs 38,994 crores. But Infosys has lowered its FY24 revenue guidance to 1 to 2.5% in constant currency terms from 1 to 3.5%. In the second quarter of this fiscal, profit after tax of HCL Technologies saw a rise of 9%, reaching rupees 3,833 crores compared to rupees 3,487 crores during the same period last year. HCL Technologies achieved an 8% year-on-year increase in revenue, reaching rupees 26,672 crores in Q2.
Discretionary spend is not happening as we have expected. And that has created a little bit of negativity at this point in time in the IT services market. And hence that you can see that the forecast and the predictions done by some of the IT companies may not be in line with what we would have expected.
In two aspects, EBIT margin and total contract value, the September quarter was positive for the major IT companies. In the September quarter, TCS saw an EBIT margin of 24.3%, Infosys 21.2%, and HCL Tech 18.5%. In terms of total contract value, the Q2 was positive for the IT firms as the clients were focusing on the cost optimization initiatives. TCS won $11.2 billion deals in Q2, which is a 38.3% increase compared to the last year. This includes the two large deals from BSNL and Jaguar Land Rover. Infosys saw an increase of total contract values by 180% in the September quarter by winning deals worth $7.7 billion. HCL Tech also reported record high deal wins worth $3.97 billion, which is a 65% year-on-year increase. But the IT majors have witnessed a decline in headcounts due to delayed decision-making and reductions in clients' discretionary spending. In the second quarter of FY24, TCS headcount declined by 6,333, while Infosys and HCL Technologies saw their headcounts decrease by 7,530 and 2,299 respectively. Experts believe that the trend will impact salary hikes in the IT firms this year.
The slowdown in the demand for resources has been there for quite some time and is going to be there. This particular thing is more of a correction at this point in time. But if you look at the way the AI and the shift from labor to technology arbitrage is happening, the dependency on humans is going to reduce significantly over a period of time. And Gartner is predicting that 2025 to 2040 era will be of autonomous business where everything is automated, even the decision-making process. So it's going to go down further.
So what messages are the Q2 results sending about the performance of IT companies in the coming quarters of FY24?
This all deal wins are for longer term period, for 3 years, 5 years, 10 years period. So for shorter term, clients are not keen on spending as of now, and that took a backseat for them, and that's why that did not get translated to revenue. So all these deals, pipeline is strong, but whatever deals they have won, that is not getting translated to revenue in the shorter term period. But this will get translated to revenue in a longer term period. So that is what all this is about, that the deal pipeline is always strong for the IT sector.
Experts believe the current slow growth in the IT sector is temporary, attributing it to a slowdown in client spending. Indian IT firms are winning more deals, and client hesitancy regarding discretionary spending is expected to fade, leading to a positive outlook in the upcoming quarters.
Stocks of key IT firms are not doing well for some time now, and the Q2 results failed to boost confidence considerably. Meanwhile, HDFC Bank has become the latest meme stock as it has consistently underperformed the markets over the past 1 year. However, a read-through of the lender Q2 FY24 results, first after its merger with HDFC Limited, has given confidence to analysts that the worst may be over. But does a positive fundamental view mean a good run at the bourses? Will HDFC Bank finally start performing? Nikita Vashisht takes a deep dive.
For months now, investors holding HDFC Bank in their portfolio have been wondering if it's the new ITC. The shares of India's largest private lender have underperformed the benchmark S&P BSE Sensex over the past 3, 6 and 12 months, testing investors' patience. However, the lender's first financial result after its merger with HDFC Limited has given hope to analysts.
HDFC Bank reported a rather mixed set of numbers with NII missing our estimates. However, lower than expected provisions resulted in a beat on PAT. Though we expected margins to compress during the quarter, the contraction was sharper than anticipated and was mainly owing to an increase in the cost of funds, the excess liquidity that the merged entity continues to carry, and also due to the impact of ICRR. However, the bank remains confident that margins will recover in the coming quarters.
In Q2 FY24, the merged HDFC Bank's net profit grew 50.6% year-on-year to 15,976 crore rupees, with net interest income rising 30%. Its net interest margin, however, fell 45 basis points quarter-on-quarter to 3.6%. Going ahead, analysts feel the reversal in NIM trajectory will support the bank's outlook.
In the coming quarters, we are of the opinion that the bank's net interest margin would inch up towards 3.9 to 4%. Further, the fact that 44% of the bank's book is into fixed rate. Therefore, even if the interest rate cycle turns, this bank would not be impacted. However, if the bank is able to generate an ROA of 2%, consistently generate an ROA of 2% in the medium term, then this could be a great tailwind for the bank.
Echoing similar views, brokerage firm GM Financial said, "We expect sequential improvement in HDFC Bank's core earnings momentum as NIMs recover gradually. Sustaining loan growth momentum will help the stock to revert its recent underperformance." That said, do technical charts also see any reversal in the offing?
1555 is acting as an immediate hurdle, which was earlier support level. If it manages to cross 1555 level, then we can expect a rally towards 1600 mark, which is a cluster of 200-day moving average and trendline resistance. If it slips below 1500 mark, then we can expect a fall towards 1400 to 1350 demand zone.
Overall, even as HDFC Bank has started on a firm note post-merger, the stock may remain sideways till psychological level of 1600 is crossed decisively. On October 18, global Qs and Q2 earnings of Bajaj Auto, IndusInd Bank, LTI Mindtree and Wipro will be on radar.
He's making plans for an early retirement. Business Standard.
After the markets, let us shift our gaze to political corridors. The Election Commission has announced polling dates for 5 states, and with it, Model Code of Conduct has come into force. But what is it? Ayush Mishra explains.
The Election Commission has announced the full schedule for the upcoming assembly elections in Rajasthan, Madhya Pradesh, Telangana, Mizoram and Chhattisgarh. The Model Code of Conduct has come into effect in the 5 states and will continue until the election process concludes. The Model Code of Conduct guidelines regulate the behavior of political parties and candidates in the run-up to elections. It aligns with the Election Commission's constitutional mandate as per Article 324 to oversee and ensure the fairness of parliamentary and state legislature elections. The origin of the Model Code of Conduct could be traced back to the Assembly election of Kerala in 1960. It gained prominence in 1962 during the general elections. However, stricter enforcement of the Model Code of Conduct began in 1991 under T.N. Seshan as the Election Commissioner, following alleged violation of the guidelines and corruption during elections. The Model Code of Conduct encompasses several aspects, including the government refraining from initiating new projects or public initiatives when it's in effect. Government entities are barred from engaging in recruitment during elections. Contesting candidates and their teams are expected to respect their opponents' roadshows with the code governing this conduct. The code of conduct for political parties and candidates includes limiting criticism to policies, refraining from caste or communal sentiments for votes, prohibiting bribery, and voter intimidation. On polling day, only authorized individuals are permitted to enter the booths. The Election Commission appoints observers to oversee the election conduct. The ruling party is prohibited from utilizing government resources for electoral purposes. The election manifestos should also adhere to the principles of the Constitution, avoid undue voter influence, and outline financial feasibility during non-prohibitory periods. The Model Code of Conduct lacks statutory authority, but it has gained significance due to strict enforcement by the Election Commission. Some of its provisions may be enforced through other laws like the IPC, CRPC, and Representation of the People Act 1951. The Code of Conduct also lacks legal enforceability and relies on moral persuasion and public opinion for compliance. It can interfere with governance by placing restrictions on policy decisions, public spending, welfare programs, transfers, and appointments. The Model Code of Conduct remains a cornerstone of India's democratic process and acts as a guardian of the electoral system. Its role in safeguarding the democratic values of India makes it an indispensable part of the country's electoral framework.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
But notwithstanding the poll code, political parties are trying hard to woo voters. According to reports, a whopping 37.07 crore rupees worth of drugs, freebies, liquor and cash was seized recently in Telangana. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.